From the floor of the CME Group, this is Danny Riley with today's Cash Close. You know what I'm going to call this video? I'm going to call it, Can You Say SPX 100-day moving average at 1911? I can. I put it out right when the S&P was making the low of the day. The high of the day in the S&P came in at 1932 even, early morning. The low came in at 1910 half, mid-morning. And last, we're 1920 half. We're down 4.3 handles. Total volume, we had 700,000 minis traded in Globex. We have a total of 2.7 million traded total. That means we've done 2 million in the day's session. In the big S&P, we have 5.8 thousand traded. MOC, it was a mix. The MIM started out showing for sale, and it gradually got worse, but it never really got that bad. And the actuals came out, MOC, sell 240 million. Now, the big thing is next week, we've got another, Monday starts out the economic calendar light. Total, we've got 17 economic releases, and we've got 7 T-bill or T-bond auctions or announcements. We've got no Fed speak. But that said, the S&P was up against the ropes at that moving average, that SPX moving average at 1911 and held. Now, my feeling is that everything got a little bit too out of whack this week. We ran a bunch of buy stops early in the week. We ran a ton of sell stops late in the week. But net, the S&P kind of held together today. You know, kind of a counter trend Friday trade, and then back down and then back up. Very wishy-washy. You know, my thinking is that we've seen a lot of lows on Globex on Sunday nights, and you may want to be paying attention to that. If not, I think you can say hello to 1885 in the S&P very early next week. You know what? Look, we've all known that the S&P has been propped up by the Fed's quantitative easing programs and zero interest rates for a long time. We've all known that the government's up to 16 plus trillion in debt, and that the stock market can't go up forever. So that said, I'm going to leave it like that. It is what it is, you guys, and we'll see you on Monday's opening print.